Welcome back to the Wesley Snipes Hand Appreciation channel. Wishing you a happy early start to Slice Tuesday morning over here, as I wanted to follow up on the short-term timeframes, relate that to the higher-term timeframe look, and then essentially prepare for the big day to come, which is likely going to be Thursday. Until then, more or less just focus on the short-term timeframes because that's where all the action is going on right now. But ultimately, there are some pretty big setups actually staring us right in the face. So with that in mind, let's just jump into it right here, right now. I want to start this analysis off with something that we haven't actually addressed in a while here, which is on the Krown trading application, which by the way is free. You can find a link in the description below. And what are we looking at? Well, we're looking at two things. Global open interest, which is actually spiked up quite significantly in the last about 20-ish days or so. And then combining that with the leverage ratios over here, we can see that there are a lot of derivative positions added. And then two, the leverage ratios at the highest levels that we've seen pretty much ever, in fact. So higher than what we even saw back almost a year ago now in November when Bitcoin was making its all-time high at 69,420. Great number right there as well. So the stage is set for some pretty amazing liquidation parties. The question is, which side's about to get the shaft? And well, I suspect that that's probably going to start to be decided on Thursday coming off of that CPI print, as we have seen a lot of volatility around those events in recent months. Anyways, let's now go into the actual price action charts themselves. I want to first start off with a bit of a recap for the last 48 hours. So we were observing hidden bearish divergence on the daily and 2-day time frames. This is the 2-day time frame right here on CME, coming off of the Wednesday the 5th, last week's highs at 20,500 or so. That did give us a bias alongside the range breakdown below about 19,800 for a move back onto the range lows here, which is kind of where we're at right now. Bitcoin, inching its way closer and closer to the ultimate blue box down here, as you can see. This is also consistent on the daily as well, as we do have hidden bearish divergence plus actually very, very low BBWP, so very low volatility environment, which typically is kind of a fireworks setup. But in this case, I would really only call a range move. So getting very close to this blue box territory over here. You could even say that it's, it's in this case, very, very close, I'd say. But ultimately, I would not be calling any sort of a major, massive breakdown just yet, or breakout just yet as well. I still need to see a higher term time frame closure below the overall range lows, which is 18,100, or at minimum there. And then, yes, we can start to talk about, big, bad, girthy red dildo party to the downside. Until then, what's most likely to happen? Probably more or less a range. So in the lower term time frames here, let's actually go and reference our indicators. And again, this was the break that we did see. I think this was late last week on Friday, and that was giving us a bias for a move back onto the range lows. I do think that Bitcoin probably has one more move here, if that, but I do not think that we're going to see an actual range breakdown today, for example. I do think that we're more or less likely to see something like this at minimum over the next 24 to 48 hours into Thursday. Maybe something, maybe a bit of a bounce attempt, come back down, spike into this region, do a little bit of that action, and then try for a bounce. I don't think that we're going to see like a full-on breakdown just yet. If it's going to happen, probably on Thursday if it is. Why do I say that? Well, 4-hour BBWP is going back into contraction mode right here, so I'm not looking at this as like a massive expansion. I just look at this as a quick spike and then back into range, which likely means, again, the range continues on the short and medium term timeframes here. Anyways, that is also consistent on the 6-hour time frame as well, going back to contraction phase. So short and medium-term timeframes kind of in agreement with each other right here. Other than that, again, I would say that yes, we probably do see a bit of an extension on this move, maybe down to the 786 Fibonacci retracement, which is about 18,600, kind of at the top end of this blue box territory. Might even spike a little bit below that. That's fine, but I wouldn't necessarily be looking for a trending move as of this exact moment. The reason why I say that is because of 1, BBWP, 2, 4-hour Joule is like way fucking low right here. These are typically bouncy sort of actions. So I'd probably be looking for maybe a quick more extension on this move down and then try for a bounce essentially. If we go and reference stochastic momentum, starting off from the 12-hour time frame, which I would define as kind of like the upper of the medium term time frames, we do see that it is still downside pressure in a very low volatility environment as long as Bitcoin's below 20,169. 6-hour time frame is very, very low here already and will actually turn up with the closure above 19,000. By the way, again, this is on CME, not spot price action, which is trading at about not $1,000, but $100 discount to spot price action. 4-hour time frame is showing about the same thing, 19,000 even, and will turn back up. 3-hour time frame is also going to be within the same vicinity, 18,900, and hourly is also going to be flippy floppy here, probably up. Indeed it is, 18,900. So we do see some bifurcation here, but a lot of them within the critical region, which does tell me that this move to the downside probably doesn't have too much more on top of it. Bitcoin's likely to be getting ready for a small bounce at minimum over the next day and a half, something like that. So that's why I do say maybe one more grind up into this region officially, and then probably tries for a bounce. Again, bounce not the same thing as reversal. It's still the same conditions as before, actually. In fact, to kind of call, in this case, it wouldn't be a trap anymore because it's like the other side's fucking trapped at this point. But I wouldn't be calling any sort of medium-term reversal here until Bitcoin's at minimum back above that 19,750 pivot, the same breakdown level as before. If Bitcoin can actually reclaim that, then I would be looking for a return back to last week's high, 20,500. And then if you see any sort of even a medium-term time frame closure above there, that's at the point where I'd be looking for Bitcoin to put in a nice girthy green dildo party to the upside, very likely returning back up to at minimum 22.5, maybe even 23,000 bucks, and then come back to it after that. Of course, that would take its time, probably into the end of this month of October. Anyways, the other things that I really wanted to address here is going to be dealing with the daily and the 2-day reads. So first and foremost, the daily, because this one updates each and every day, so it's highly relevant. And as we discussed before, this was a bearish reset right here, for lack of a better term. Anyways, first and foremost, let me explain the signature for the millionth and first time, but it's all good. Repetition is the something of something. I forget what the saying is, but it's important is what it essentially comes down to. And it comes down to this. It's a volatility versus stochastic momentum signal here. This is the volatility component of this particular setup, and it is represented by the BBWP indicator. Anyways, anytime that we have seen the BBWP indicator get to extreme lows, which are defined as below 10 percentile or more, and then expand from those extreme lows by, essentially confirming the signal, which means that the BBWP has a positive slope above the moving average, and then also above the critical zone as well. Well, for each and every time that we've seen this in the full history of Bitcoin on CME, not on spot price action, but on CME, the average move has been about 24.25% done over the course of about 2.5 weeks on average, and the stochastic oscillator has been correct in getting the direction of the volatility expansion 83.33% of the time. So, very high probability there. Again, 83.33 is not the same thing as 100%, so we're talking about statistics, not certainties here, but this is why I've been paying particular attention to the daily stochastic oscillator. So I shouldn't say we are, but it is looking highly likely, as I'll say, that it is going to be rejection of this trendline regression, also rejection of the bullish control zone here, and it will officially have a closure across the downside today with any sort of a closure below about 20,000 bucks, which, we've all seen crazier things in $1,000 rally in, 13-hour session, but a little bit further below there as of right now. So with that in mind, if this does officially cross the downside, then I do look at this within the context of a very low volatility environment as, once again, providing the potential rocket fuel alongside what we observed over here with the leverage ratio and the increase, the relative increase, I'd say, in global open interest, as, setting up for a higher probability break to the downside than the upside for the overall range here. Now, of course, also, trend and macro trend is in the same direction as that as well. But until I actually do see an actual confirmation below the range lows, I just personally do not want to be, looking for significantly new lows until that happens. And there's still, a chance of, a bit of a bear trap here as well. I would say that the full-on bear trap gets fully confirmed above 20,500 at that point. Very, very likely Bitcoin doesn't just, go for 22.5 to 23, but probably even tries for the summer highs at 25,000 bucks. Still within the cards as long as Bitcoin does hold these range lows here. But here's the thing. If we see this fish across to the downside, I'm just reading off the statistics, and it'd be more likely to break to the downside than the upside. Again, awaiting full-on confirmation of the BBWP component of this. That's the most important thing. And then, yes, we can start to look at these statistics as most likely to be applied to the downside. And that means that we could take, that average move. We could even take the first in aviation representing where we expect 68% of the results also fall between as areas of interest as well. And that could give us, price targets down, if I can scroll it out enough. For the average move at about 24% puts Bitcoin at about the mid 15s. 15%, which is the lower end of the first standard deviation, puts Bitcoin at about 17-ish. Yeah, 17-ish. And if we go for all the way 33, which I think is kind of a lot, but perhaps relevant, that would put Bitcoin at about $13,500. So all of those areas would be, of interest if Bitcoin were to fully break down. Those are kind of the areas we'd be looking for at least bounces and maybe even reversals, maybe even major lows. Keep in mind, though, this would very likely take some time as well. From the actual signal confirmation, about, again, 2.5 weeks on average. We can also combine with the 2-day signal as well here, a very similar signal, but a slightly different signature or just different indicator. We're going to be using the volatility of stochastic momentum right here versus stochastic momentum. And yes, it's incredibly low, and being that the 2-day is a higher time frame in relationship to the daily, it does imply, a greater resolution as well. This one will actually turn down officially, not today, but tomorrow if price action does close below 19,250. And, well, you can read the stats over here for yourself as well, which can obviously imply, further confluence towards downside price targets if that were to occur. If Bitcoin, however, I still think that the ultimate hopium for Bitcoin is something like this. You'll see, maybe a grind out of these lows right here, a little bit of a short-term bounce attempt, just bore the ever-loving shit out of everyone until, like November basically, and then pop back above first, that 19,750 region. That would be the first sort of green flag that we're going to see a pretty massive bear trap here. I would say that that's fully confirmed above 20,500 right here. At that point, it's just a matter of looking at areas of interest to the upside. Probably at least testing, to 23, probably more like 25 over time, however, as well. So until then, until we do see a full on range resolution, there is still a bit of hopium, I suppose. I think that this is what it would look like, but, do be aware of what the historical, these sort of historical probabilities have kind of painted within this case, because that is, at least in my opinion, the best way to be going about things. Doesn't mean it's going to be perfect, but it doesn't need to be perfect, just needs to be good enough over time. So with that in mind, I think that's a good place for me to leave off on this particular video. I want to be wishing you the best as always. Probably should have shilled Bybit a little bit earlier here today. They still got their promotion going on, I do believe. I should probably check in on about that, but I think it goes till the end of this month for 0% fees on maker orders for both spot and derivative contracts, which is actually kind of a big deal, and I quite like that. Other than that, I think that's it. You can find that link in the description below. Much love, take care, and see you hopefully soon.